Good afternoon. George Cavaligos for HFT Bonds. What did we learn today? Not much. Inside day, another light volume trade. A little bit better volume than yesterday, but not much. Again, an early rally that seemed to not make headway and fail, and the market closed near its lows again. I don't know if any of this matters. You know, we got the FOMC meeting tomorrow, and all bets are off until we hear what they're going to do. Are they going to start the taper? Are they going to talk about starting the taper in September? Are they going to give us any hints as to how much they're going to taper? We don't know. And I'll tell you what, it doesn't pay to go into these things with a position. You know, trade afterwards once you know what, you know, the prognosis is, and have your levels marked out in advance for where you think the market can go and where it might reverse, those types of things. You know, I'm looking at the daily 10-year chart right now, and it says 125 even to 127 and a half range. You know, if it gets down around those old lows from, what was it, the beginning of June, I think it was, no, end of June, sorry, June 24th, 125 even plus low in the 10-year. And I think the low in the bond was, what, 133.18, 16.18? Sorry, 133.04 was the same low in the bonds. And I kind of think those are important levels, especially if that idea that we had kicked around about a head and shoulders bottom possibly forming here in the treasuries is going to remain intact. We really should not trade much back below those levels. Otherwise, we're going to go and look at the old lows there at, you know, what was it, 132.02 and 124.11 on the 10-year. That's your downside levels. On the upside, you've got those necklines that we've spoken about. 127.16 on the 10-year, and it's actually downsloping on the bonds. They're different, you know. The neckline on the 10-year is upward sloping, and the neckline on the bonds is downward sloping because of the way this recent consolidation is formed. So I think you want to watch those levels on the upside. I don't think the market's going to really get outside. 135.20 is the neckline on the bonds. Sorry about this focus, guys. I tried to turn the focus down in sensitivity so it wouldn't do that blurry in and out stuff, but it's not working well. My camera's too good. So even if I move forward or backward like an inch, or my hands come up into the screen, it picks that up. Sorry. I'll try to sit still. It's hard for us Mediterranean types to sit still, though. Okay. I'll see you in the morning email. Hopefully we'll get this whole thing clarified and the markets can get back into some type of a normal trading environment. Nah, not with all these central planners around thinking they can fix everything. You know, a lot of people talking, you know, negatively about Chairman Bernanke and the Fed. I don't think they're the guys to blame. They're the guys, the little Dutch guy sticking his finger in the dike, keeping the dam from breaking. Because our administration and our Congress and pretty much all our elected officials, even down to the local levels, are just corrupt, greedy, and all there for the wrong reasons. And until we get term limits and ban lobbyists, there's no hope. It's the long slide down the tubes. I'll see you guys tomorrow morning. Have a great night.